how can we use this public infrastructure when we don't really know who's interacting on it? We don't know who the counterparties are. We don't have assurances on a lot of things that, we have in these proprietary closed loop, closed network systems. And that's really kind of at the heart of the kind of future of this space, which is, how do we continue to build on open networks, open protocols, distributed systems, but also kind of provide assurances that are necessary for all matters of entities. And I'm not just talking about banks or things like that, but even, the Amazons of the world or, technology companies, the Apples of the world, all these types of companies. How are we going to get to that place?
And welcome back to Mind with CoinFund. My name is David Pakman. I'm the head of venture investments at CoinFund. And I'm here with my co-host and CEO and founder of CoinFund, Jake Brukhman. Hey, Jake, how are you?
Thanks, David. I'm doing well. Back in sunny Miami, where founders and investors are starting to trickle back after a summer as things cool down elsewhere. So excited to get back into the Miami game and host our monthly happy hour next month.
Those were super popular before you took your summer break. So it is September, it's back to school, the leaves are beginning to fall, the air is cooling down, but things are warming up here at CoinFund, and it feels like in the crypto space as a whole. Jake, I know you're headed to Singapore for Token 2049 next week. I think by the time this episode lands, you'll be there. What are you most looking forward to in Singapore?
Well, it's been interesting because I would say I'm like booked solid with meetings for this event, which is kind of in contrast to the general sentiment of crypto right now, which is a bit low after 2.5 years of bear market here and still not having gone through the election season yet. But it feels like Token 2049 is kicking. There's a lot of founders coming in. There's actually the second time this year I'm going to be in Singapore for crypto events. And that's really exciting as Asia continues to be an important market for crypto. Besides Token, David, there are a lot of things happening right now in Web3 in general. What are you thinking about in these upcoming weeks and what trends are you on the lookout for?
Well, as you know, I'm the data-driven guy, and I'm always looking for data-driven evidence of usage and traction. And there's actually a lot more of that than there is excitement about price action, which I find to be a short-term indicator of where we are. Believe it or not, NFT trading volume is up. A bunch of decentralized social experiments have gotten some real usage and engagement. There's a bunch of stuff in TON around gaming and usage there. But perhaps most exciting is stablecoin usage, which is 50% or more of all blockchain transactions. And so today is the perfect day to talk about stablecoins.
That's right. Lots of exciting things in store, including today's interview. We are excited to welcome Jeremy Allaire, co-founder, chairman, and CEO of Circle, to the show today. Jeremy is a longtime entrepreneur and technologist, previously founding and serving as chairman and CEO of Bright Cove, one of the leading online video marketing platforms. In Web3, he has become one of the most prominent figures in the space, founding Circle, the company that issues USDC, which is the second largest dollar-pegged stablecoin by market cap. He's been a fantastic advocate for stablecoin usage, its proper regulation, and so forth. And we're honored to have him on the show today. Jeremy, it was the best of times. It was the worst of times in crypto. Thanks for joining us in this particular moment. How's it going?
Really good. Happy to be here. Great to see you guys again. And yeah, I'll see you in Singapore too. I'm incredibly excited about everything that's going on right now. There's just so much progress happening on so many fronts. And so kind of taking a long view, I'm sort of more bullish than I've ever been about crypto infrastructure, the kinds of utility that's coming online. And so I'm excited. It's a really significant moment for stablecoins specifically too.
Well, awesome. To start the show off, Jeremy, we've got so many questions for you and really want to hear your frontline experience in dealing with the number one use case, honestly, for crypto. But before we get to some of that, what's the one thing in crypto that no one is talking about?
I don't know that I could say that there's one thing in crypto that no one is talking about. There's such a huge surface area of stuff that's happening. One thing that maybe I could share, something that I've been thinking about, and there definitely are people talking about, but I don't think it has become front and center yet for people. When we think about the development of this infrastructure, and we think about the development of, in particular, public blockchains as like a new internet operating system layer on the public internet, really reminds me of a time in the early days of the web, where the web was it was difficult to use, it wasn't very scalable, but very importantly, it wasn't secure. And there were lots of concerns about, all these different risks of utilizing the public internet as an infrastructure. Today, especially when I look at stablecoins, but I think this applies more broadly as people talk about maturation of DeFi and as people talk about, kind of mainstream TradFi coming online and tokenized real world assets. So there's a bunch of stuff that people are talking about. But there's two really critical issues, and they're tied together. So one is basically, how can we use this public infrastructure when we don't really know who's interacting on it? We don't know who the counterparties are. We don't have assurances on a lot of things that, we have in these proprietary closed loop, closed network systems. And that's really kind of at the heart of the kind of future of this space, which is, how do we continue to build on open networks, open protocols, distributed systems, but also kind of provide assurances that are necessary for all matters of entities. And I'm not just talking about banks or things like that, but even, the Amazons of the world, or, technology companies, the Apples of the world, all these types of companies. How are we going to get to that place? And I think, fundamentally, it really is about taking advantage of crypto's ability to provide credentials and proofs and applying that in really broad ways. And so, again, there are absolutely people talking about ZK, and ZK is a critical part of scalability that's taking place. So there's a lot of applications for ZK, and obviously like fully homomorphic encryption as well. But what we're not talking about enough, in my opinion, is basically, provable credentialing for tons of things, not just for like, I'm a human, which is important in an age of AI, or I am a person who has been validated under a certain set of your customer standards and I'm in good standing, or, I'm a person with all these attributes and so on. And so I personally believe that to unlock the billions of people coming and the millions of businesses coming, it's kind of like we didn't have, and I'm going to use the analogy of the early internet, we don't have SSL yet. And so if you remember the early days of the web, like secure sockets layer, transaction layer security required people to come together and say, here's a standard. And here's a standard that we can all agree to. And when we build clients and servers, we build browsers, we build email systems, we're all going to agree to this standard. And there are a lot of reasons why it's been hard to build standards in the crypto community. Part of it is because the kind of tribalism and the kind of ecosystem centricity that comes with like ecosystems that have tokens. And there is a little bit of like prisoner's dilemma in this as well. And so this is a place where I'm thinking about this, and we care a lot because we want everyone to be comfortable interacting on this infrastructure and have assurances and be able to have verifiable, using crypto, kind of cryptographically verifiable credentials for all manner of things. And I think that's like it's just a huge unlock in usability and a lot of things as well. So that's something I'm thinking about that there are definitely people talking about, but it's not front and center. And a lot of people just don't like to talk about it because they're like, well, we want this to be completely anonymous. Why should we ever need a credential of our identity, right? That's bad. And so, I guess my view is like the fundamental infrastructure should be, IP is just data is moving on IP and just there's sort of moving on blockchains. But as we kind of layer up into other applications, right, we do need this credentialing and we do need to apply cryptographic methods to achieve that.
Jeremy, I think you're right on. And that kind of attestation or provable credential functionality, I think we've been hearing about this in crypto for many years. I mean, I remember some of the earliest projects at Consensus in 2016 and 2017 focusing on this. However, I guess this is a good lead into my kind of next set of questions, which is what seems to be stopping that world from really coming together in a big scaled, kind of evenly distributed way is some plan for broader adoption. And so maybe that leads me into this question that I've always wanted to ask you, actually, which is essentially, do you think that blockchain adoption happens kind of bottom up in a consumer tech sort of way, or do you think it happens more top down through institutional kind of adoption? And my guess would be that your answer is the latter, since you're working a lot of stablecoins, which is a big issue, in the institutional space. But I'd love to hear, what is the process of adoption that actually gets us to that world where we can do things like credentialing at scale?
Yeah. Well, maybe to address one part of your question, which is sort of where does adoption come from part of it, and then maybe come back to the credentialing question. So my view is that adoption very much happens bottom up. And that is, in fact, what has happened, right? So just talking about stablecoins specifically, for example here, stablecoins have entirely been a bottom up phenomenon. That is you're solving a problem of, you have 24/7 continuously settled markets, and you need 24/7 continuously settled digital dollars, and you need them to work on blockchains, just like every crypto asset works on a blockchain. So by necessity, you needed this, and that was a bottom-up innovation. Now, there's certainly philosophies and ideas around where it can go, and that was certainly the case for us and has been the case for us. But the bottom-up piece is it's sort of solving a problem, and then that the benefits of that technology, then more people start to say, wow, this actually solves a problem for me as well. And I liken this to, and in fact, the way we think about our business is relevant here, which is we think about USDC as a network, as like an internet utility, like a public internet utility. It exists as a public protocol that's on the public internet, and any end user can take any piece of open software, connect to that network and utilize it. Developers are free to connect to the public APIs of the public smart contracts and build apps that integrate it. And actually, the vast majority of the adoption of USDC has just been through that developer flywheel. Developers build apps, they build wallets, they build services, they build protocols, they integrate. That actually adds utility on the network. And then the value of that overall utility grows. And there's sort of a liquidity flywheel through that, but then there's a sort of network utility as well. And so because this is a technology that has been, coming out of a very frontier of fintech and frontier of kind of finance and technology, the first movers are people who can make the decision to use this without a lot of complexity. Individuals, interested parties, i.e. those that are active in trading markets, but increasingly it's also, smaller and medium-sized even enterprises, right? Think about SaaS adoption or cloud adoption or other internet utilities, like Facebook was a consumer phenomenon and then became a huge platform for businesses. But similarly, like SaaS, when Salesforce.com launched, which was this sort of customer database utility, which is really all it was at the start, like it was all small businesses and startups that were using it. There's no way General Motors was going to use that. It was just impossible, right? So it got its flywheels going with SMEs. And SaaS was like, no big company would use SaaS because, we can't control the infrastructure. This is not secure. This doesn't have all the blah, blah, blahs. Mm-hmm. And so you have this kind of thing where like smaller institutions can move faster. And so if you look at stablecoins, that's exactly what's happened. You have this sort of birth out of necessity in digital asset markets. And that's all types of participants in those markets. And then gradually, and we've seen this, is you're seeing basically, end users pulling on this as a store of value, as a medium of exchange in emerging markets all around the world. And then you're seeing SMEs as well, who are basically especially in emerging markets. These are small and medium-sized businesses that are basically saying, hey, I've got to buy something from someone in Vietnam and I'm going to get it shipped to me in Brazil or where have you. And I don't like my local currency. I don't like the legacy rails. I can't get good dollar banking. Everything's slow and expensive. And they're like, hey, will you just settle up with me in stablecoins? And these firms are saying, hell yeah, this is a better way to do it. It's like, why would I send you a fax when I can send you an email? And so it is kind of bottom up. And as you kind of get the capabilities that are needed for the bigger firms, which includes credentialing, and sort of tying that back together, as you get the capabilities and the law, right? Like individuals and small business, they're not paying attention to like, how am I going to treat this on my balance sheet as a public company? Because they're not public companies and they don't have to think about that. They're just like, this is digital cash and I have it. And yes, they work with their accountants to properly account for it, but it's different than when you've got to meet certain, public filing standards or what have you, or a financial institution where like what you can actually put on your balance sheet is a regulated matter. And so kind of come from bottom up. And so this coming back to the credentialing, like, I think we need to solve it where it is today. It would be nice if we could just say, hey, what if, Apple and Alipay and like all these other giant companies, like immediately like crypto enabled their wallets, blockchain enabled their wallets, and they all issued like cryptographic credentials for the users on their devices. And then, wow, we've got this like at scale. I think rather it should just come from the bottom up. I think that what was important is that the companies that are committed to Web3 tech, and that now includes a lot of significant companies, right? The companies that, including Robinhood and Stripe and Revolut, and obviously the crypto native players like Binance and Coinbase and others, but in all around the world, there's companies committing to it. If you can just create a ZK proof standard and kind of create a structure similar to like SSL cert issuance. Hey, I can create a cert and I could be Fred Nished creating a cert, and I wouldn't really trust that. But if there's like level 2 and level 3, I trust a level 3 digital certificate to like secure my e-commerce site, and that's the highest level of security, and my browser presents it to me that way. But if it hits some rando site with a weak SSL cert, like it might be like, be careful or whatever. So you can create, but you need basically the players at the table now, not the players at the table in the future. You need the players at the table now kind of saying, hey, we agree to this and we're going to implement it, and then start doing it. And it may take some like major first movers to kind of get that going. We're seeing some examples of that with like ENS. And I think that's very positive. And it seems like the ENS team is very forward looking. They're not even about Ethereum entirely anymore. They're like thinking about, hey, how can we be aligned with like chain abstraction more broadly and things like that. So anyway, that's a little bit of how I think about that.
Let me tease a couple more things out. It sounds like I'm hearing an evolution in some of your thinking since maybe the things that you were focused on a few years ago when we didn't have enough infrastructure here to do this. But maybe just first, you're probably used to the crypto critics, asking the same question, like, what are stablecoins good for? I mean, even just the last few days, there was I think it was a journal or Bloomberg article on that other stablecoin, and, painting with a broad brush that, well, stablecoins are just used by people who want to use the US dollar, but want to evade, US currency controls or, other regulatory restrictions, which of course might be a small minority use case, but it's certainly not a majority. But since you are, more focused on operating with regulatory clarity, can you just help discuss like what are the current, maybe bottoms up stablecoin main use cases where you're seeing like real volume from? And then it sounds like what you're saying is, and if we had cryptographically verifiable credentials, that unlocks a whole bunch of other, sounds like even more enterprise oriented use cases. But maybe just help paint the picture about where we are now and how that may be changing over time.
Yeah. So there's all these frameworks that we have when we think about technology adoption life cycles, right? There's famously Geoffrey Moore's Crossing the Chasm. And I can relate to that and have been through a lot of major technology adoption cycles really for 30 years on the internet. There's sort of the point in time analysis people like to do. And I've been basically saying, I think we're around 2003 when it comes to crypto. There's other people who are much more cynical and say, no, it's more like, it's like before there's even HTTP and it's just really there, it's whatever. And I think there's like a whole set of things that kind of need to happen. And I'll talk about those, but I want to more directly answer your question, which is, if you look at the Geoffrey Moore cycle, the kind of typical, looks like a standard deviation curve, right? We're still basically, what I would say is we're just crossing the chasm. So like in some ways, like the chasm is that, you got the early innovators that are like, this would have been from like 2010 to like 2019 or whatever of crypto. And then you've kind of got the early adopters, and the early adopters are just willing to deal with more technical complexity, but they're really getting benefit from it. But it's a small part of the market, right? The early adopters is small. And the crossing the chasm is basically when you're able to make that leap from the early adopters that are willing to deal with the complexity and challenges of the technology to the technology has gone into the background. It's become invisible to the user, and its utility, and it's sort of like it's a 10x or 100x tech, and its unit economics are so superior. And you've crossed that chasm, and then you go into what's called the slope of enlightenment, and that's actually when the curve goes exponential, basically. And so I think we are like leaping right now over the chasm. And the reason I say that is that the amount of organic activity that we are seeing around stablecoins is incredible. And there's been a set of breakthroughs. I really feel like even in the last, 6 months, 12 months, where scalable blockchain infrastructure, the kind of 1 second, 1 penny type of transactions that are consistently usable on many different L2s and L1s, like we've hit that. We are seeing kind of cross-chain abstractions that like minimize what a user needs to know, although we're not quite there yet, but we're seeing that. We're seeing experiences where gas disappears as a concept and where you're just interacting with an app and maybe you have a stablecoin. And that's like what you're using if you have to pay a fee or other things. So again, we're close to that. But we're seeing more and more apps that look like that. But we're also just seeing developers everywhere. We look at, again, the metaphor of we run a platform network utility business. The number of developers that are launching new things that are more mainstream. They're like consumer utilities, cross-border payment utilities, treasury management applications, savings applications, these RWA applications, all these things, literally like every week, there's just like new stuff that's launching, and they're mostly startups, although some big companies too. So just the volume has grown a lot, and we do see the demand shift happening. And so we believe that around a third of USDC adoption is firmly in kind of digital dollar, store of value, cross-border payments applications. That's way up from where it was. That's way up. And, you can overlay like the growth of on-chain stablecoin transactions, which has sort of continued to rise despite maybe sideways markets. It's like this continued growth. So we see that, and we see the developer activations that are happening and all the number of apps that are getting built. And we can see, back to the credentialing thing, even something as simple as smart account wallets or smart wallets. We have a product for that. Coinbase has a product for that. There's a whole bunch of really great startups with products for building and deploying that. And we're effectively, you can onboard with a biometric auth with the pass key or an OAuth that becomes like a sharded key. And like, you've got a great onboarding experience. Like you now have a great onboarding experience. Stuff is recoverable easily. It feels safe. The UX is good. The economics work. So all of that combined, suggests to me that as these things become widely available developer primitives, and we have a whole developer platform stack, which is available to any developer. There are obviously, Privy and Alchemy and Coinbase, developer tools and lots of others. I don't want to not name anyone, but like all these, like we're right there at a point where building on chain is going to be very straightforward for many classes of both business, enterprise, consumer applications. So we're right there. So back to that metaphor of like, where are we? Like we're jumping over the chasm, but we haven't gotten to the other side yet. I think we got to close the loop on a number of these things, which we're in the process of closing technologically. And then I think finally, we need legal clarity. We need digital dollars defined as legal electronic money, not just in Europe, where USDC is now legal electronic money, not just in Japan, where we're on a path to have USDC be legal electronic money there, or in Hong Kong or Singapore or Dubai. We need it in the United States. We need the dollar and digital dollars that are issued in this way, that are managed on this infrastructure, blessed by the federal government, and we're darn close. And so when you have legal certainty and then you have these kind of technological unlocks, then you go from early adopter, which are the small businesses, the individuals, the households, and then obviously the people who need this for digital asset markets, and you leap into this huge new, much larger market for grabbing that utility.
Speaking of regulatory certainty, I believe this summer, MiCA started to get implemented in Europe. And I heard that Circle was actually thinking about doing a stablecoin for the euro. So can you talk a little bit about that? Has that regulatory clarity kind of improve the conditions for your business there? And how do you think about competing in the European market, I guess, as an American company?
Yeah. So on July 1st, which was the day that MiCA went effective for stablecoin law, Circle became the only global stablecoin issuer to be legally authorized for a digital dollar in the European Union. And our euro stablecoin, EURC, became fully authorized also as legal electronic money in the EU. So we're the only global player with that. This is a strict law. It is an extraterritorial law, like GDPR is globally. And so for any market participant, whether you're running out of Seychelles or you're running out of France or Germany or Spain, wherever you are, and if you are offering or selling to users a stablecoin, it has to be a MiCA conformant and issued stablecoin. We worked with the regulators. We worked with the European Commission. We worked with central banks in Europe to do that so that USDC could be issued both out of the US and issued out of the European Union. We're the only company that has that capability. And so that's really awesome, and for kind of that regulatory clarity. And so there's a huge amount at stake there. And basically all of the digital asset market participants globally either have to become conformant with MiCA by December 30th for their products, or they'll be violating the law. And so there's like a market structure shift that's happening because of that. And it's around 20% of the market. But the really interesting thing is our euro stablecoin has actually had some very nice growth. It's nowhere near the numbers of dollar stablecoins, so I don't want to estimate it. But we are effectively the largest euro stablecoin, and that's happened reasonably quickly. Coinbase is getting hugely behind it as well, making it core to all their products. You can one-for-one create and redeem euro for EURC. You can use it on DeFi. You can use it on DEXs. So you can basically get cross-border payment flows that are at the speed of the internet with cross-border liquidity provided on-chain with costs that are below anything, including the cheapest fintech products.
Jeremy,
That's a big deal.
As a developer, in Europe, can I make an app, a mobile app, that lets people use like Apple Pay or a credit card in the app to buy one-to-one, add some EURC to a wallet and start to use it on the internet and get it through the Apple App Store?
So it's a good question. The one-for-one thing is up to the reseller of the stablecoin, right? Meaning someone can create EURC on a wholesale basis with us one-for-one. If you're like a MoonPay,
you want to charge for it.
And if you're a MoonPay, you have a business model as a payment processor and you're onboarding European users and you're letting them use their cards. But you can use like SEPA Instant, which is like very common in Europe on like your Coinbase app. And you can, basically get near instant one-for-one euro for EURC, including kind of in and out. I don't know what they offer for transactions.
Yeah, sorry. I didn't mean, is the issuer allowed to take a profit or not? I was actually sort of in an uncute way trying to get to, does Apple charge 30% for?
No. This is electronic money. It's not, they don't have the ability to charge fees on electronic money purchases. No, it's no different than like topping up your Revolut with an Apple Pay card in Europe. It'd be the same kind of thing.
Gotcha. Awesome. I guess just thinking back to your somewhat surprising answer that a lot of adoption has been bottom up. How do most people onboard onto USDC? Is that something that happens like they go directly to the asset, or do they get a Coinbase account and go from there? Or is there another onboarding ramp that they take?
So the way to think about that is maybe to kind of explain our architecture a little bit, which is basically Circle is, we kind of have a few different pieces to what we do. We have the blockchain infrastructure that we operate, which is like the stablecoin protocols, CCTP. We're launching more and more blockchain infrastructure products. And those are just on the public internet. Anyone can connect to those, build with those, use those. And that's sort of that public utility side of it. The second big piece that we have is essentially the more regulated part of what we do, which is sort of the actual liquidity, the asset itself and the liquidity infrastructure around the asset itself. And so there's sort of how we manage the whole kind of minting and redemption, reserve management, the global banking network. And what we've basically built up is a global liquidity network. And what does that mean? It means that we face the market on a wholesale basis. So you can't come open an account with Circle. We only face wholesale market participants. If you're a small business, you probably can't open an account with Circle. But if you're a wholesale market participant, you're an exchange, you're a brokerage, you're a payment app, you're a payment processor, you're a fintech, you're a neobank, you're maybe a large enterprise, but like basically you're in those buckets. You can directly open a Circle Mint account. And then we run a banking infrastructure now that's expanded dramatically over the last year all around the world. If you're in Europe, you can mint and redeem USDC through our regulated entities directly in the European banking system nearly 24/7. If you're in Asia, if you're in Singapore or in Hong Kong, or you have the ability to bank in those places, you can mint and redeem USDC from those local banking systems nearly 24/7 right now. You can do that in the US, obviously. We've just brought online the ability to create and redeem 24/7 directly with local currency in Brazil and also in Mexico. And so we've basically built out this wholesale create, redeem infrastructure around the world. So entities around the world can do that. And that's the primary way that kind of on a wholesale level, USDC comes into the world. A lot of that then goes out through distribution partners. Coinbase is a huge distribution partner for us, but we have tons of other distribution partners. And a lot of these end up ultimately, I might go open an account with Kraken, or I might go open an account with OKX internationally, or I might go open, there's like 5 major European brokerage platforms. I might go open an account with those, or I might open my Robinhood wallet app or open up my Revolut app, and I can get USDC. If I'm a customer of Nubank in Brazil, they have 100 million users, the most successful neobank ever created. You can go get USDC in Brazil. And so these are the ways that USDC comes into the world. Now, we have a fundamental obligation to redeem USDC from our customers and holders if they can meet our kind of compliance obligations. So that's sort of the big picture of how that works.
Let's talk about the US. You've been a great advocate for crypto broadly, but of course, regulated or regulatory clarity around US stablecoins. You alluded to it earlier today that we're getting closer. Paint us a picture of what the US should do, and then, I don't know, give us your estimation of if we will.
Yeah. So the interesting thing about the US in this is that it was actually US government leadership nearly 4 years ago that basically went to all of the leading governments of the world through the G20 and said, we need to have stablecoin policy and we need to have it rolled out globally. And the US was pushing that very hard because they saw the dollar stablecoins were here. They saw that they were probably going to get much bigger. They obviously thought maybe a company like Facebook was going to get into that market, but they pushed and said, we need to have stablecoin policy. And actually, 3 years ago, the G20 agreed to it. It was an agreement of the G20. The presidents of the countries signed off and said, we will implement stablecoin policy. And so creating policy doesn't happen overnight, right? You've got legislators, you've got congresses, you've got ministries, you have all these review processes, consultations, a lot of sausage making. It's very different everywhere in the world. But basically, over the last 2 years, almost every major financial market center in the world has either introduced, is in active consultation for, or is imminently going to have laws for stablecoins. And the policy framework and the design of those payment stablecoin laws has been pretty consistent around the world. And it actually mirrors fairly closely the mode of operation that Circle has, both in terms of reserve composition, audits, disclosures, the level of risk management and compliance that we have as a firm. And that's a positive thing. It also is around the world, there in every jurisdiction, these are laws that are going to be, and regulations that are going to be supervised by central banks. So that's very important because stablecoins are being treated as actual electronic money. They're not securities. They're not some weird synthetic commodity derivative thing. Right? They're being defined as legal electronic money. They're payment system innovation and prudentially supervised. So that's consistent. But they're also, all these laws are consistent in terms of you can be a bank to do this, but you can also not be a bank. You can be a payment innovator. You can be a fintech innovator. You can be a lot of different things. And so coming back to the US, that's really critical. And so there is a law that is in Congress that is being worked on called the Payment Stablecoin Act. It's been actively worked on for more than 2 years. There's broad bipartisan support for that law. There's been a huge amount of work done by both parts of the Congress, from the Treasury Department, input from the White House, the Federal Reserve, and we're darn close. This is by far the one piece of legislation that I believe could become law in the lame duck session of this Congress, because it has largely been worked out. And so, when Senator Schumer says, hey, I think we're going to get something done here, that's what I think he's referring to. And so this is very close. And so if it doesn't get done in the lame duck, it will get done in the next Congress. It's a high priority. We know it's a high priority for the likely leadership, whether you're Republican or Democrat. So I feel good about it. And I think as it's currently designed, this law, I think it's very good. I think it opens up the market to tons of companies, right? Payments companies, banks, others can get into this and start building and offering products. And it's got a very high bar in terms of standards for what it is to be a digital dollar issuer. And so I think it will provide the clarity that the whole market needs and the rest of the world will need when they think about what are legal electronic digital dollars that run on blockchains.
Well, we are, I think, less than 60 days from the election, and crypto has been defined pretty clearly as an election issue at this point. And, both candidates have addressed it to some degree, or at least are in the process of doing that. And I was just wondering, do you have an opinion about which election outcome would be sort of more auspicious for the stablecoin space?
Yeah.
Or does it really not matter?
Yeah. So one thing you might notice behind me is the Circle color palette, and you might be noticing the color of my shirt. So Circle is purple, and we have always been purple, and it is actually the defining color of our color palette. And I think we're purple politically as well, which is that we believe very strongly that crypto infrastructure, blockchains, digital assets, stablecoins, these are nonpartisan issues. This is a technology. It's a technology innovation. It's important for the United States. It's important for U.S. competitiveness. It doesn't matter what political party you're in. That's important. There may be differing views on how to regulate it, how much regulation, how deep the regulation, which regulatory agencies. There's definitely a debate about that. But from my perspective, it's a nonpartisan issue. I'm very pleased that it has become an issue that both political parties care about, and that both political parties are investing the time with industry leaders to hear their perspective, to hear about what would make this an attractive country to build in. I'm very proud of the fact that we count, the United States as our headquarters. And so I think there may be differences in policy. It's really hard to know until you know who's running which chambers of Congress and who's the leadership in each chamber of Congress and who are the appointments in different federal agencies. And some of this, I think, transcends that. The kind of work on what is a payment stablecoin in law, there might be some things around the edges that would differ, but I don't think the differences would be that dramatic.
Got it. I have one more on a slightly different topic, which is there's a few kinds of stablecoins out there. Obviously, USDC is fiat dollar backed and interoperates with the traditional banking system. But we've seen other approaches to stablecoins. For example, MakerDAO, now known as Sky, has been asset backed, but those assets are crypto native assets like Ether. And then we've seen other systems like various types of algorithmic stablecoins that try to stabilize the price, through various crypto economic schemes with some mixed results. But I'm wondering, what do you think, Jeremy, about those other kinds of stablecoins? Are they less interesting than what you guys are doing? Or maybe there's a algorithmic stablecoin, in Circle's future?
Yeah, I think my thoughts on this are fairly simple, which is that if you want digital cash on the internet, you want that digital cash instrument to be as close as possible to actual government-backed money. And that's fundamental as a base layer for money on the internet. And in fact, that is effectively what all these laws around the world are doing. They're establishing this kind of electronic cash type equivalency, which is really important. Because if I'm an accountant or I'm a business or I'm just an individual, I want to know that this has kind of got this cash-like status. And that's very important. And it's not surprising that form of dollar stablecoin dominates today. Mm-hmm. Now, there are definitely people who don't want to hold cash and who want to invest their money. And there are lots of strategies. Forget about crypto for a minute. If I'm a household or I'm a corporate treasurer, I've got cash that's working capital. And then if I have other money that I don't need on a short-term basis, I might invest that in investment products. And those could be money market funds, those could be corporate bonds, those could be derivatives that are hedging my currency risk, or like whatever those are. But I'm purchasing investment products. And that's because I want yield. I want a return on my investment. That is what yield is. So there's lots of ways to deliver yield in the blockchain world, just like there's lots of ways to deliver yield in the TradFi world. And so will we continue to see growth and innovation in on-chain yield? Absolutely. I mean, it's extraordinary. The biggest and most popular form of on-chain yield is, over-collateralized lending through Aave, through DeFi. And USDC is like the most borrowed product. So people can take digital cash and they can choose to invest it or lend it to get yield, or they can purchase what is essentially like a hedge fund, an on-chain hedge fund. You're basically making a purchase into a particular trading strategy. You're sort of subscribing to that, right? They may not like being classified as a security or derivative or what have you, or might be trying to operate so they're not treated that way. But there are investment products, and I think people should be aware of those differences. And we see a big opportunity. And USDC today, for example, is the most widely used for these new investment products like tokenized money market funds. And it's sort of the most widely used way for people to purchase and redeem these kinds of things as well. And so we see, synergy there in terms of cash and investments, just like cash and you've got your brokerage account or you've got your stock trading account, right? So there are these relationships that are there, and general purpose digital cash has huge utility for a ton of different things. But we're quite happy with the kind of product that we offer today as a kind of regulated payment technology and electronic money product.
Jeremy, we're big fans of yours. We love your company. We want you guys to succeed. We all use your product. We want you more to succeed. We want you to prosper. So where can our listeners tune in to follow you or learn more about Circle?
Yeah, sure. I'm active on x.com, Jer Allaire, and Circle is also active on x.com. So Circle, at Circle, and then obviously circle.com.
Thank you so much for joining us, Jerry. We really appreciate having you on the show.
My pleasure.
That was Jeremy Allaire, co-founder, chairman, and CEO of Circle. For those of you who tuned in, thank you so much for listening. If you feel passionately that we got it right or wrong today, let's keep the conversation going. Leave us a review. Let us know what you thought. If you'd like to follow me on Twitter, my handle is Pakman, Pakman, and Jake's handle is jbruk, spelled Jbrukh. Make sure you download our episodes wherever you get your podcasts. We'll be back soon to dig deep on ideas that are worth fighting for. Thanks, everybody.